We spent the past couple of years in a crazy hot market. Louisville home sales decline as demand outpaces supply. Effective communication is at the core of any situation. If you master these two ideas, you'll have a chance of being successful at residential real estate marketing. I think you need to be looking for investment opportunities that move the needle. The market will never crash if demand exceeds supply. This is what I've been telling you all along.
This is the Jay Pitt Show.
And we're back, folks. Welcome back to the Jay Pitt Show right here on Talk Radio 1080. I am your host, Jay Pitts. Ryan, still not fired.
Oh, we're still here.
Still here, babe. Hanging around.
No, this is fun. It's fun to do this, talk one-on-one, and be in a really cool studio. So
yeah, for sure. Did you get the hanging around reference? I'm not going to do the voice.
No.
You didn't get it? Okay. It's John Malkovich from Rounders, man. You know Rounders?
No, is that before my time?
Dude, it's before your time. It's Matt Damon. Like, it was the movie that, like, came out right around the time Texas Hold'em was getting, like, really big. Okay. When ESPN started, like, making a big deal out of the World Series of Poker. Come on, man.
So, you mentioned last show, you're the oldest millennial?
I'm a millennial.
So for the listeners, I am the youngest possible millennial. So we're both millennials, but
very different.
Yeah, different ends of the spectrum.
Yeah, I think that I saw a graphic one time, a meme going around the internet. It was like pictures of like a rotary phone. You know what that means? It was like AOL Instant Messenger. You know what that is? If you're an old millennial. You know, so like you have no idea what that means.
Well, I'm starting to get to the age now though where I'll be scrolling social media and I'll see somebody makes a video. It's like, man, this was the day, like the best time of the NBA, like childhood. This brings back so many memories. And I'm watching the video and I'm like,
they're talking about like Chris Paul.
I'm like, what? Yeah.
Like, come on, bro. Chris Paul is old for the NBA now, but.
Because it's like people that are, I don't know, 18, 19 now didn't get to experience Kobe Bryant, for example. Like, that's my core NBA. And what I remember, I'm like,
for me, it was Jordan. For me, it was Jordan. But Kobe and Jordan were so similar. Anyway. No, that's, that's funny. The good segue, I think. I'm watching this show on Netflix right now that is about the genesis of Spotify. Right. So we talk about a lot of tech here and, you know, you're obviously a startup guy. So this is like right up your alley. I think we've even talked about it. Have you watched it?
Yeah, I have watched it.
Okay. So I'm in the middle of it. So no spoilers, please.
Spoiler that they do really well.
Of course they do. Yeah. I mean, it's still, you know, so the episode last night where they were like, the founder was like putting his fist down about we will never have a paywall, you know, and it's like, come on, dude. Like we all know you end up with a paywall. So anyway, the companies that they were trying to defeat, like all those were like my heyday, like Kazaa, LimeWire. Like you probably didn't even know any of that.
I was around. I did download some music off LimeWire and other things.
So I had certain songs, and what gave me this idea to bring up was the AOL Instant Messenger reference from a minute ago, which you absolutely don't know. You might that would be like in a tech museum from your standpoint, but I had certain songs that were downloaded off of like LimeWire or Kazaa that had the AOL Instant Messenger message notification like in the song because whoever was uploading the music, like somehow the wires got crossed and it was like gave the little message notification and you always knew when it was coming. Like it was a joke amongst me and my friends. It was like, you know, 2 minutes and 18 seconds in, there's the boop, you know. Anyway, but we didn't care. It was free music, man.
Does watching that bring back memories?
For sure. Like the original Spotify logo was like, oh God, I'm old.
I don't even remember that.
Yeah. The original Spotify logo gave me a little bit of nostalgia. And that was, you know, whatever. I mean, like we went from all that to iTunes and we're buying 99 cents a song on iTunes. They don't even make much reference to that at all.
I do remember that. You had to pay for every song. So before even subscription.
Which, I mean, compared to buying albums, that was still cool because, you know, a lot of albums, I mean, I'm not a music junkie, but like, you know, I can appreciate good music. And there's certainly artists that I want the album no matter what, even if the songs are obscure, even if they don't, you know, are not the hits or the releases. I want the whole album. But there's a few songs that you're going to play at a party that you could do without the rest of the album. Right.
Yeah.
So anyway.
That's a good show. It's it's one of those that's in a different language, so
it's a little distracting, but I can get by it.
Yeah, it's good enough where you pay attention.
Yeah, if you can watch Squid Games, you can do this one.
Yeah. All right, let's get into this segment's main topic and something we're going to be doing every week: story from the field, an agent story. So this one happened from an agent we know. So I'll just frame it as a question.
Yeah.
So let's say you're showing a home. Your client goes in the attic. They're looking around, just making sure everything looks all good, but they fall through the roof. I'm sure there's a lot of different...
The
ceiling, not the roof. My dad would not be happy about me getting that wrong right there. But yeah, I mean, what happens? I know there's a lot of different angles it could probably go through, but let's just talk about this.
Well, we talked about the team Slack channel, and it's where these questions come from. I mean, it's funny because our agent that brought this forward, she did it in kind of like a really funny way. It was like, hypothetically, what would you say if... Now, anyway, like... The first question was posed, how many of your clients actually get in the attic? Which my response was, I don't care how many of my clients get in. If there's a pull down staircase to go to the attic, I'm getting in there. Because I'm always just looking for ways to set a point of differentiation. Like, I know what I'm looking at. I know what I'm looking at from years and years of experience. And a lot of real estate clients, they've never had an agent that knows what they're looking at or is willing. I mean, I could tell you stories, man. I remember showing up to a home inspection and the home inspector was given some bogus findings, and I'm in a tie and, suit. I take my jacket off. I take my tie off. I climb in an attic, and I'm talking like ladder up into a hatch, not up in a pull down. And I'm army crawling through the attic with like the cellulose insulation top to bottom. And it's in the summer and I'm sweating. It's sticking to me. Look like I've been tarred and feathered. I mean, it is. Here's the thing. If you're a real estate agent, get in the attic. Get in the crawl space. Okay? Nothing will inspire your client more to work with you than being willing to sacrifice your personal appearance or your comfort for their well-being. Period. Point blank. If you do it, your business will be better than if you didn't. Okay, so to answer the question, what happens? What happens is the person that damaged the house pays to have it fixed. Okay, in this particular case, we had nobody, our client didn't buy the house. They made an offer, but they didn't get it accepted. So now this man, unfortunately, who is not purchasing a home that he wanted to purchase, now maybe not for the right price that he wanted, so he's probably happy that they didn't get the deal, but he has to pay to have the ceiling fixed. And it's unfortunate, but just to give you some tips, drywall is nailed to the rafters, right? It could be screwed, but it's probably nailed. Okay. And really, screws, nails, doesn't matter. If you step on the drywall and not the rafter, the ceiling drywall, you're going through it. Like my 3-year-old, okay, he's massive, but he would probably go through it. Like it would not support him. Drywall, sheetrock, I don't care if it's 3/4 inch, you're going through. Most ceilings are 1/2 inch. Like, do not, if you're in your attic at home, lay down some sheets of plywood, please, so that you don't have this happen. And realtors, don't step on the drywall. Stay on the rafters. Clients, if you're up there and you want to go see, be careful. This man's lucky he didn't get hurt, right? I mean, it was like full-on Chevy Chase, National Lampoons, like feet dangling through the ceiling. But I mean, you got to pay for it because it's tantamount to damaging anyone's home. That's the thing. If they want to hold you accountable, you're going to be held accountable.
You hear stories like that a lot. I mean, maybe not that one in particular in real estate or brokerage offices, but you do hear some pretty interesting stories. And if you want an interesting career, get your real estate license. I mean, the things real estate agents have to do, the general public doesn't really know about always. I remember when I first started out, you gave me a lead and I was walking through a field in a painter's suit because apparently it was infested with
bugs,
ticks. No, we're just walking through a field. You probably know who this is, but yeah. Ended up selling a house, but I mean, gosh, agents.
We see so much. And back when I used to do the foreclosures, man, it was even better. Those stories were so gold. So golden. I mean, the things you see, like the most personal moments. Now, we keep those private, of course, but there's some humor. And amongst real estate agents that we can relate to, we do share some stories from time to time. But, it's such a business. It's a business that's just so personal.
Yeah, and like you said, some of those hard things, difficult things that you can do as an agent, whether it's nasty or not, it is what sets you apart.
Oh, it absolutely is. And point of differentiation is what everyone's looking for.
Yeah, people appreciate that.
Yeah, know you, like you, trust you. That's what people want to know before they choose to work with you. And trust is built in pretty simple ways, right? It's like, will this person do for me what no one else will?
Yeah, I mean, it really is be yourself and have your client's best interest in mind. And I mean, just try to do the best you can for them. That's really what people want.
For sure. All right, folks, that's about all for segment 1 here today. Jay Pitts Show for Ryan Harris on Talk Radio 1080. Real news, real talk, real estate.
Welcome back to the Jay Pitts Show, Talk Radio 1080. I'm co-host Ryan Harris here with Jay Pitts.
Yo,
What's
yo.
going on?
Yo, yo.
So, we've talked about kind of your history getting into real estate and being an agent. And, that lends you a lot of credibility. And it's a big reason why a lot of people reach out to you. But I don't think what we've talked about really at all yet is your involvement in investing in real estate. I mean, you've been doing it for a while. You've flipped homes. You've had successes. You've had failures. I think you've really found what you like to invest in now. And I don't know. It's very interesting. I always enjoy hearing you talk about investing in real estate. So Let's talk about that a little bit.
Well, I mean, we recently hit 100 agents at Remax Premier Properties. So, my primary business is selling homes. And this is what selling homes, but actually more than seeing actual clients on a day-to-day, I mentor and lead agents and help them solve problems so that they can sell real estate. That's more of my day-to-day. I do represent some clients, including myself as an investor. But it's one of the things that I advocate for real estate agents. I mean, let's think for a moment. If you had a client that would buy multiple homes per year from you for the rest of your career, that would be a pretty good client, right? But that's not your run-of-the-mill homeowner. They're going to upgrade once every 7 years, if that. And that's only going to happen 2 to 3, 4 times max, probably. But an investor, can buy property from you every year if they're successful at it, right? So I advocate not only should you represent investors, but be an investor yourself, because how can you have any credibility working with and representing an investor's best interest if you've never done it for yourself?
Do you think you should do one before the other, or it could be kind of vice versa?
Well, I think there's a sequence to everything. I think personally in this market, and I would argue that maybe this is not the case in other markets, higher price markets, I think you should be a homeowner first. I think that is your first investment. Take care of where you live. Okay, put down roots, stability, start building equity. Now, a case can be made for doing the, tax deferring strategy of buying a primary residence, improving it, selling it, escaping capital gains, and then taking that money and using it to buy another, or retaining your first home as a rental for a couple of years, because I think the capital gains laws are 2 of the last 5. So you could technically rent your home for 2 years, take the 5th year to sell. So live in it 2 years, rent it for 2 years, take the 5th year to sell. Meanwhile, you're living in your second home for 2 years, right? And then making a move every 2 years.
I feel like a lot of new construction builders do that.
A lot of builders do it. Young people without a lot of, life, burdens, responsibilities, it's much easier for this. I set out to do it. We only did it once. But I made a substantial amount of money. I essentially flipped my first house, put down about, a substantial amount of money, more than I could have any other way, on my second home. Lived in it for 10 years, did the same thing. I upgraded in 2019, phenomenal timing, and financed it 2.25, so like that is what it is. But investing to me started off really interesting because I really enjoyed renovating homes. I saw a lot of opportunity to add value. I'm plugged into the market. I know what's a good deal and what's not. I'm seeing it for my investor clients. So I'm buying the best. I'm selling the rest. And sometimes the best come at bad times, and you sell the best, and you really build good clients when you pass a deal off to someone that you should have bought yourself, right? So I do advocate. I used to attempt to pay cash for rentals, but that was in an era prior to rates being as low as they have been for the last several years. So when you can find 3, 4, 5% long-term 30-year money, you should probably lever up a little bit. Now, I am not an advocate for levering up at 85, 90, 95% of the home's value. I want you to be at 80, 75, 70% of the home's value borrowed. It's just going to allow you to move further faster, right? I like single family homes. They're incredibly liquid. I know a lot of people love apartments. I personally think apartments are tough in Louisville unless you're very well capitalized. And what I mean by I'm like hedge fund capitalized, like multi-million dollar deals. To me, it's hard to make money in 4plexes in Louisville. It's hard to make money in 12plexes in Louisville. All the money in apartments is in the 300-unit developments that have just been built in the last 3 years. And even those are trading at 5 and 6 cap rates. So, I like houses. Accessible, marketable, liquid, etc.
I think right now it's pretty tough to be an investor in Louisville if you're just getting into the market and don't really know what you need to know. It just seems like there's so many investors in Louisville that have come here over the last few years.
Well, all the coastal investors are looking inward because most of the coasts are being bought up by foreign investors. Why that is, we could talk about, but that's, probably a little more of a political topic than I'd like to get into. But what I would say is, it makes it harder. I started in real estate in Louisville at the best time to be an investor. The problem is I had no money. I had a good income, but I had been able to save no money. So what I would do is I would attempt to flip a house and make approximately $20,000 on a flip. And I would actually look to purchase a $20,000 home with that profit from the flip.
People listening to this are a $20,000 home.
Minds are blown. I actually bought 6 or 7 for 20-ish. And in pretty good neighborhoods. So I bought $20,000 homes and I'd put, 5, 10, 15, 20 into them. $30,000, $40,000 invested, and they would rent for $500-600 a month right back then. Now they rent for $900 a month, 7, 8, 10 years later. The houses have paid for themselves multiple times over. They're good houses and they sell for $125,000-130,000. And these are homes along the Waterston Expressway, probably west of I-65, but not too far.
How long have you been a real estate investor now?
I bought my first home. I sold my first rental ever in 2020. The first rental I've ever sold, I sold in 22, and it was the first one I ever bought. And that was 15 years. I owned it for 15 years, so roughly 16 years.
Do you have any golden rules you've developed over those years, or maybe they've changed from like the beginning to now of, hey, these are my golden rules when investing in real estate, and I'm not going to deviate from them?
Well, the golden rule is you make your money when you buy, not when you sell. As much as that convention has been challenged the last few years with the appreciation we've seen. I mean, I say the last few years has made heroes out of a lot of goats. Right. And I don't mean greatest of all time. I mean like actual goats, like the butt of the joke. But time does heal, right? property values over time genuinely go up. I think you buy and improve and sell to raise capital to buy and hold. Real estate investing is still, I think, the best vehicle for building personal wealth for the individual in this country. Lowest barrier to entry. There's a lot of golden rules. If you're talking strategy, I like houses. A lot of people don't like houses. It's usually a function of effort. I own a property management business. That makes it pretty limited in terms of effort to manage a house. Managing a house here, a house 5 miles away, a house 5 miles from that, a house 5 miles from that, a house 10 miles from that. That's a chore, right? There's a lot of work. Real estate investing is not passive. Okay, yeah. A lot of people call it passive.
Misconception.
It's a big misconception. It is not a passive investment. It's an active investment. So if you have a good property manager that you have access to, or you're like me and own a property management company or are able to start one, that makes investing in real estate a lot easier.
You do manage properties for other people as well, correct?
Yeah, we manage about 450 units, and mine are nowhere near that amount.
Gotcha. So you don't follow any like golden rules, 1% rule?
The 1%.
The cliche, bigger pockets.
Well, bigger pockets has ruined a lot of that stuff. The 1% rule is unachievable in most markets. It has been unachievable in most markets for quite some time. It's been unachievable in Louisville for a while.
I've read where it used to be the 2% rule.
Yeah, no, that's true. I mean, my dad used to say he wanted 13% returns on all of his investments. Now it's like you're lucky if you get 6, which is funny because treasuries are at 5. So you can buy a treasury, at 5, and so like 5 caps are almost, non-starters anymore.
Have you ever built to rent? I know that's getting a little more popular.
I haven't, but I've built homes to sell and not been able to sell them all that quickly and considered renting them.
I think that's really hard to do in Louisville.
It
just
is
with
tough.
how much there's not many lots available, and they're too expensive if they are.
No, I agree. Absolutely agree. Build to rent is for lower price communities, like more suburban, less urban,
Smaller towns.
Yeah. Good old E-town. All right, folks, that's all we got right here for segment 2. We're going to take a quick break. We'll be right back with the Jay Pitts Show on Talk Radio 1080.
Welcome back to the Jay Pitts Show, Talk Radio 1080. Jay, you think this is getting any easier yet?
We might be getting the hang of it.
Yeah, feels like it's flowing a little better.
A little bit better, a little less deer in the headlights look when it's time to close out a segment. I think we're gonna be just fine.
So let's get into this right here, Jay. Biden-Harris administration, they announced reduced mortgage insurance premiums. So let's start very basic here. What is a mortgage insurance premium first?
Well, before I get into that, this is from the Broke Agent Media, or BAM. This is a new outlet.
Yeah, they're crushing it.
Their stuff is so good. I know a lot of these guys: Byron Lazine, Tom Toole. Some of these guys are contributors and actual friends of mine.
I think what's really cool about what they're doing is they're taking these influencers that still sell real estate, and like everybody really respects and takes their word for what it is, and I don't know, it's new and it's really doing well.
Yeah, no, absolutely. I love it. Love it. So we're going to be quoting you articles probably from them quite often. So back to your question. What is mortgage insurance premium? Is that basically what you want me to do?
Let's start there, and then we'll get into what they did.
Well, because a lot of people don't know what mortgage insurance premium is. It's commonly known on conventional loans as PMI. Mortgage insurance premium, or MIP, is the FHA variety, essentially. And there's a couple of different types of MIP. There's upfront and ongoing. So what they're talking about here is the ongoing MIP, the mortgage insurance premium. So let's talk. Why is mortgage insurance premium required? When you buy a home, okay, the bank that you borrow the money from, Ryan, they don't have enough money to just loan to anybody who wants to buy a home. Even if you're qualified, no individual bank has enough in reserves. these loans are backstopped or supported, if you will, endorsed, words like that, by the federal government. Whether it's a conventional mortgage, which is typically Fannie Mae or Freddie Mac, conforming loan, or it's an FHA or VA or even a rural housing, RHS, KHC, Kentucky Housing Corporation, any of those loans, right? There's somebody behind them. There's some institution behind them. So Fannie and Freddie are quasi-governmental organizations. They're sponsored by, I won't get into that. That's a whole nother political conversation, but they profit, but they receive funding from the federal government because the truth is there is no private entity with enough money to promote housing or home ownership in the United States for 330 million potential people, and still have liquidity to be able to operate on a day-to-day basis. Like your tax dollars are what make these things possible. Now, specifically mortgage insurance premium is required because it is shown time and again, actuaries have studied, when a borrower has a smaller down payment, they are more likely, substantially more likely to default. Default means they don't pay their mortgage and the home gets foreclosed. It's also down payment. It's also proven that down payment is the single greatest barrier to homeownership for most individuals. So FHA, Federal Housing Administration, promotes a loan, an FHA loan, which is geared towards owner-occupant first-time buyers, okay, as defined by someone who hasn't owned a home in the last 3 years. I don't know if you knew that, but you're qualified to be a first-time home buyer, quote unquote, if you just haven't owned a home in 3 years. You could have owned 20 homes. If you haven't owned in the last 3 years, you are considered, according to FHA, a first-time home buyer.
When you say owned, is that bought or
owned?
Owned, okay.
Owned. Yeah. So if you sold your home and then you rented for 3 years, you're now a first-time home buyer again. So in this case, what banks have done, both on the conventional and the FHA side, is they've determined that an insurance policy is the best way to counterbalance the risk of offering loans up at lower down payments. So you'll see MIP on FHA loans, PMI on conventional loans. That's nothing more than an insurance policy that's paid for by the borrower on behalf, okay, with the beneficiary being the loan provider, that says if I default, the mortgage insurance company will pay the mortgage lender the balance or a portion of the balance back. So it reduces the risk and makes it more likely to lend. So in this case, the Biden-Harris administration reduced the ongoing MIP for FHA loans, they state in this article, approximately $800 a year. Okay, so let's do some math. There's a rate. It went from 0.85%, that's of the loan amount, down 30 basis points to 0.55%. Okay, so when you do some math on that, okay, I will tell you, it also goes on to say in the article that the average FHA loan in the United States is 50% of the nationwide median home price of $540,000. Nationwide median home price $540,000, average FHA loan $270,000. Okay, which is about what the market median is here in Louisville. So on that $270,000 sales price, okay, you would save $66 a month. You'd multiply that by 12, it's roughly $800. It's like $798 a year. Now, what does that equate to in affordability? Because you got to look at the full impact here. Really all that does, because people aren't going to buy $270. If they can afford the $66 more per month, they're going to buy more house. They're going to get the payment. People, first-time home buyers specifically are payment-driven, okay? Not price-driven. They're only price-driven because they're payment-driven. So they're going to buy a house that's $10,000 more expensive. $10,176 is the increased amount of affordability. That's what the administration is trying to achieve. But there's a big but. That could mean something here. It might mean a little something here.
Essentially, what you're saying, though, they're trying to make homes more affordable for first-time home buyers.
They're trying, but it's a drop in the bucket, Ryan. It's a drop in the bucket because 10,000. Okay, how many homes have we seen sell 10,000 over list the last several years?
You can't count.
You can't count it.
It's unimaginable.
The average price, to list price, the list to sale price ratio in Louisville for the past 2.5 years has been above 100%. The average home has sold above list price. So it's easy to spend $10,000 is 1/27th of a $270,000 sales price. It is a drop in the bucket. Yes, it might get you over the hump a little bit. Yes, it's nice to save $66 a month. It's not nothing. But like when you consider like the financial decisions that have been made over the last several years, we're not backing away from the cliff. We're not backing away from the ravine, right? The mortgage industry, the real estate industry, and as it pertains to first-time home buyers, they're still looking at pretty bleak circumstances.
Yeah, I mean, it's really a never-ending revolving door right now. Any way you look at it, they're trying to make homes more affordable for first-time home buyers. But let's take a step back, and we were talking about the supply side earlier. The supply of homes just keeps lowering and lowering and lowering, and that's not getting better. They really haven't done much to help that. And by doing this, and this is a good thing for first-time home buyers. Don't get me wrong. They need to help them. But by doing this, it creates more demand while supply keeps shrinking, and this never-ending revolving door is going to lead to more expensive homes.
Well, here's the problem. The problem is the PR of the whole situation is backwards. If you attempt to stimulate demand, what are you doing? You're incentivizing business owners, okay, construction people, builders. The building industry has consolidated. We have large national builders that build thousands of units, per market per year. It's going to be hard politically for anyone to get behind stimulating supply. This is why this problem exists and why it probably will not be solved anytime soon, because you're exactly right. When you stimulate demand, you worsen the conditions for those demanding homes at affordable prices. We can eat up that 10,000. We just illustrated it. You can eat up that 10,000 in no time. Okay. So we saved you $10,000. Congrats. Oh yeah. Well, now I just got to pay $10,000 more for the same house at the same payment that I had prior to your reduction in MIP. And oh, by the way, if I default more because the cost of everything is more expensive, well, there's less coverage on the loan side to protect the entity that gave me the loan. So what happens later? They're less likely to give me a loan. I mean, let's just look at it, right? Right. $4.9 trillion spent in the United States since 2021. $4.9 trillion. I was really quite interested when I saw that to consider what the United States wealth is in general. Do you know what the entire wealth possessed by the entire United States is?
I do not.
111 trillion. Okay. Here's the craziest stat about that. And I think you and I talked about this on a video that we did not that long ago. 70% of that is controlled by those 55 and over. Okay. You know what the world wealth is?
Nope.
463 trillion. The United States comprises 23% of the world's wealth. That's a mind-blowing stat right there. But even more mind-blowing is when you consider that U.S. baby boomers alone have 16% of the world's wealth. Okay, so here's what I'm saying. I want to help young people live the American dream and realize and actualize homeownership. But the way to do it is to stimulate supply. How do we do it? I don't know. Why don't we privatize construction? Or not privatize, but why don't we take it into the government? Can the government build housing?
Could they make it easier?
Could they make it easier to build housing? I don't know. Something needs to be done, but supply is where the problem is. That is one thing that is for certain.
Yeah, I mean, I know I have a lot of friends right now that waited the last few years to buy a home, and they're struggling. Not sure, honestly, if this is going to help any of them buy a home. It's a good first step, and it gets the conversation going at least, which is the most important thing. I think the conversation has been going on for a while, but it just needs to continue, and it's going to have to be solved somewhere.
The one thing that I will say is that rates are a little bit lower on FHA. Okay, and with lower MIP rates, it makes the FHA loan a little more attractive. So maybe that's the silver lining, is that more, entry-level buyers start opting for FHA loans. Anyway, that's all the time we got for this segment, folks. We'll be right back after the break. Jay Pitts Show, Talk Radio 1080. And we're back, folks. Segment 4 of the Jay Pitt Show. Host Ryan Harris here. Ryan and I have this nice little conversation in between each other. Do you want to bring it back? Do I want to bring it back? I'm not sure. What do we do? I think we're getting the hang of it, guys, but, feel free to make fun of us on the socials. We'll be good with that. Anyway, I think it's non-real estate question time.
Yeah, we're going to, like I said, do these every show. But I want to say, I think you have your signature call on coming back to the show. Folks, it's pretty good.
Folks is a word that I like.
I think you have a great radio voice.
Ooh, I don't know about that. Don't know about it. Little extra coffee, I will say, on the day that the show is recorded. It's a little extra caffeinated energy, a little more voice rasp, a little bit more.
And we were talking before recording. Don't like to eat before this.
No, I've spoken in front of crowds. About 1,000 is the most I've ever spoken in front of, and it just wrecks your stomach, man. You cannot eat. You're sleepy. You're groggy. It's like I feel like you're just gonna, let
tell you
let
something.
It go.
I've really learned in my adult business life, and that is probably the worst thing you can do for your day is eat a massive unhealthy lunch during your workday.
I would add only to that is consume alcohol with that massive
yes.
lunch.
And unfortunately, in the real estate industry, that happens a lot.
I don't see how they do it. Like, it might as well be Madison Avenue 1960s, like Mad Men style. Like, and they're not hard liquor. It's not like they're sipping brandy.
No,
neat.
but just 2 beers, I'm ready for a nap.
Dude, I've told my wife this. I said, once I consume an alcoholic beverage, my day's over.
Yeah.
Like, I'll take care of the kids, but like, don't expect me to do much unless, of course, I'm doing work around the house. Work around the house is different. No work outside the house. No. None. It's not happening.
Yeah, I learned that. Have a healthy lunch and sets the rest of your day up for a chance of success.
The problem is then, and I'm a slightly larger human being over here, slightly large human, and that means I eat about like 8,000 calories for dinner is what ends up happening.
When Jay says slightly large human, he's like 6'4"?
6'4", but I'm not like 170 pounds either. Like, I think I was like 170 pounds when I was like 14.
Gotcha. Well, anyways, let's get into the non-real estate question of the week. And this is a little more business related one. The other ones have been a little more fun, a little more deep thinking, but your calendar, you're a busy guy. You have a lot going on multiple businesses, now a radio show. How do you schedule? If you had to give a scheduling tip to anyone that's starting to get busy or just needs help with their time management, what would it be?
Yeah. So I'm of the kind of, I pride myself on being a good negotiator. I think that ultimately made me good at real estate, right? Like, there's a couple of things that are required to be a good real estate agent. First, you have to be a good marketer. Second, you have to be a good negotiator. And sometimes, the last few years, you had to be a good negotiator first because the marketing was kind of passé, right? We didn't need to market. There was such a disparity between supply and demand that, like as we've discussed at length, homes just sold themselves. It's a matter of how much over the price can you negotiate for me. You make your 1, 2, 3, 4 points, right? You earn it by negotiating the seller the same margin. So I view scheduling very similarly to negotiation when I'm scheduling with another party, right? And I think that serves me well because the other person doesn't typically look at it as a negotiation, right? Now, don't let me fool you there by making you think that it's adversarial in any way. I just want, like in a negotiation, to come from a place of strength. Oftentimes when I'm setting an appointment with a recruit, with a new client, with anyone, I want to be in control. I think I'm more likely to get the outcome I want in any interpersonal interaction when I'm in control. And I may have impeccable customer service. I may, yes, ma'am, no, ma'am, yes, sir, no, sir, right? I may appear subservient, but I'm in control. Okay. So when it comes to scheduling, I like to use the alternative choice close. Okay. Now, This is not the cheesy like infomercial, 3:00 in the morning trying to teach you how to do multi-level marketing. When you say, well, how does Sunday at 2 or would Monday at 4 be better? Like, it's not that thing, right? And I've said this, and I think Hannah even captured this in a video. I say it like this. When do you typically prefer to meet? Mornings or afternoons? Now, earlier in my career, I might have said something more like, when do you prefer to see homes? Weekdays or weekends? Because I was perfectly willing to show homes on the weekend. Now, am I now? Not really. I'd really rather not. So,
and plus, if you don't offer up if somebody only wants to see homes on the weekend, they're going to let you know.
They're going to ask for it.
So you don't have to bring that up as an option.
But there's a chance that if I take control of the interaction from jump, that I get what I want. There is no chance if I don't take control. If I tell them, and invariably we all know this, when left to chance, somebody is going to want the single least convenient time that you have available. So I say things like, what works better, mornings or afternoons to meet? Oh, afternoons. Fantastic. Tuesday and Thursday afternoons, I have some time available. Typically, most of the time it's between 2 and 4. I actually have a 2:00 on this coming Tuesday, but I can meet at 3:30. Or 2 or 3:00 on Thursday. How does that work for you? Right? So I've given them the appearance or the illusion of a choice. And actually it is a choice, but it's within the constraints that I've set. You notice I didn't say weekdays or weeknights. I didn't say weeknights or weekends. I didn't presume that it needed to be inconvenient for me. But the truth is I don't want to take meetings after 5, and I don't want to take meetings on weekends if I don't have to. I'll show a client a home if I need to. Okay. But this extends to even the busiest of real estate agents or the busiest of people that have, less control. You can assert control even though you may not feel that you have it. That's my number one. Let me ask you this, Ryan. Did the doctor ever offer you 7 p.m. on a Saturday for an appointment?
They did not.
They do not. An attorney won't. A CPA won't. Any high-level service. Now, I'm not going to sit here and say, I'm not going to be that guy and say, oh, well, being a real estate agent's harder than going to med school. I'm not going to be that guy. Okay? All I know is I'm going to learn from the way that high-value professionals treat themselves. I'm going to treat myself the same way because let me tell you, the opinion of realtors is really low. It's a low-held opinion that the consumers have. Unless they have the realtor. There's no in between. You either don't have one and you have a low opinion, or you have the best one that ever lived and you would never let them go for anything. And it's because this process is that personal. It's that hard. It's that difficult in some cases. And we're worth every cent and then some when those moments come along.
I think that's what's beautiful about being a real estate agent is there is so many opportunities to set yourself apart and make yourself loved because of the low opinion. Like, you have the greatest chance in front of you because of that.
Yes. Our competition sets such a low bar. It's so easy to exceed. Like, low barriers to entry. Like, people want to be upset about that in our industry.
It's beautiful.
It's beautiful.
Yeah.
It's beautiful because it lets me stand out.
What about your account? So let's a little more specific on your calendar real quick. Do you schedule everything you do in your calendar? Throughout the week at least?
I schedule all personal time first. All personal time goes in the second it comes out, the second the kid schedules. My wife and I share calendar entries back and forth. Everything goes in first. I try to be very routine and systematic. Okay, I go to the gym the same time every day. I go to the office the same time every day. I have Monday, Wednesday, Friday schedules, Tuesday, Thursday schedules. Like, everything is very routine based because I want to be able to do it. Look, you don't have to remind yourself to brush your teeth, hopefully.
Yeah.
Right? You just brush your teeth. Like, you do it the same way every day and you don't forget, presumably. That's what I want a lot of my life to be like, because that allows the mind space to be freed up to focus on the important things that need my mental investments. Do I schedule everything? I mean, not like after the fact. Like, I'm not anal about wanting to make sure that something is in there that happened that I didn't see coming. But if I know about something, yeah, if it's not in my calendar out in front, and then it doesn't exist. It does not get done.
Yeah. I try to get everything in my calendar, not brushing my teeth and stuff like that. But I think what I've really noticed is, back to real estate agents real quick, so much of the lives intermingle with just your personal life.
Yep.
So like scheduling is even more important. And this just goes for any business owner or entrepreneur, really. Your business life is going to mix with your personal life throughout the day more times than not. And like using that calendar is so important.
It's incredibly important. And I try my best not to make my email my to-do list, but it ends up happening no matter how hard I try. But the schedule really requires consistent maintenance. Very few people do I know are incredibly successful at anything without being impeccable at managing a calendar.
Some of my mentors have talked to me about just in the startup space or technology space. And it's like the importance of time blocking. I'll say I'm not very good at that. Just saying I'm doing this for the 30 minutes because I'll be doing it and I'll get a notification from one of the other founders asking me something. I'm like, I got to respond to that. Yeah. But I want to get better at that. Well,
time blocking, my answer for time blocking has always been routine, because I would punish myself for not having the discipline to do the thing in the block that it was set for. And I found myself constantly fighting, mental anguish kind of battles with myself. So when you work out of routine, you do what feels good, what feels right. You just got to build that routine first. Anyway. All right, folks, I think that's just about it for this episode of the Jay Pitts Show. Hope you enjoyed everything. Again, we're airing on Saturdays, Talk Radio 1080 from 9 to 10 a.m., Sunday, 6 to 7 a.m. for the repeat. We're coming back at you week after week. Once again, for Ryan Harris, I'm your host, Jay Pitts, Talk Radio 1080, the Jay Pitts Show.